Okay, everybody. So happy Sunday again for the 100th time. Hope you're all doing well and have had and are having a good weekend. I'm looking forward to next week. I don't know what it is. No, what I do know what it is. It's just being a trader. Oh man, there's nothing more enjoyable than just being able to trade. And I just look forward to Monday so much. It's just absolutely crazy. Um, I'm really looking forward to next week. I don't know what's to come, but what I do know is that I'll be taking my trades as part of my numbers and whatever the results will happen. And I think even if I don't get positive results or go through those losses or those break-even trades, whatever, it's just the journey itself is just so excited to be a part of. Nothing for me is more rewarding than just doing what I know I should be doing over a period of time, knowing that eventually I'm going to achieve those results. And the more experience you become, the more familiar you become with the charts and understanding the patterns and etc., the more you don't have to wait as long to get those results, if you know what I mean. You know, some of you might be going through a process of learning, understanding structure and behavior, etc., and it might take you maybe a little bit longer than others, but keep persisting at it because you'll get to a stage where, and if you see my YouTube video, I think it's such a powerful video, and I'm so happy you lot gave me feedback the way you did. I didn't know it was going to offer that much advice or clarity to what some of you thought I may be doing as a trader, but you know, just seeing that video itself and just being able to realize that next week, just go into trading and just enjoy what you're doing, man. Just take your trades. If you take 3 trades on Monday, you take 3 trades on Monday. You know, if you lose 2, win 1, okay. Do the same thing on Tuesday. Just trade. Don't try to trade to make money. Don't try to trade to win. Don't try to trade to be 100% accurate. Just trade to trade and just let the numbers do the work for you. And if you look at that YouTube video, you will see that I took 10 trades over X amount of time. That's a 5-minute time frame. That was a pretty long period of time if you look at the duration. So don't expect those results to come just in a single day. Sometimes you do have to wait a couple of days. Sometimes you have to wait a week, and sometimes you have to wait 2 weeks. But start to fall in love with the process, and that's what I'm saying. Next week, I'm really excited because I don't care if I win, if I lose, or I'm break even next week. I just know that I'll just keep doing this, and then guess what? I'll enjoy the actual journey itself. Yeah, man. I mean, there's no other word to use, the actual journey itself. And that is dealing with the losses, controlling the emotions, getting up, knowing when to walk away. That's a win, you know, being able to walk away, knowing when to cut your losses. That's a win. Everything is a win if you're just following the process. So that's what I'm going to be focusing on next week. And I'm really excited, really, really excited. So I hope you are as well. Now, I'm going to go through 10 pairs: Euro USD, USD JPY, Pound USD, Aussie Dollar USD, Pound Yen, Euro Pound, Euro Yen, USD Cad, USD Swiss Franc. No more gold. That's done. 1, 2, 3, 4, 5, 6, 7, 8, 9. And then I think it was Cad Jpy. We left Cad Jpy off last week for our full week's analysis. Um, did that continue pushing up? Let's take a look at this. Yeah, geez. Okay, fine. So let's take a look at these pairs. Let's just see if there's any questions in the chat. How can I hide the panel of Zoom? I'm not sure. Euro USD, you're calling out 19,800 level. What, for the price to come all the way back up here? Oh, I don't call levels, man. And I don't call levels. I'm just waiting for price to do what it's doing. So let's take a look at Euro USD. Very interesting chart. Now, who feels more confident after we done our session on Thursday, the patterns and process mastermind? Who feels a lot more confident after doing that? I'm going to be editing that today for you all as part of a series, and I'm going to be uploading it so you can take a look at that today at some point before tomorrow. Awesome, loved it. Yeah, good, man. I think it was a great session, right? Just to understand that the charts in front of you are not just candles and just key levels and ebbs and flows. Like, there's a lot more to it, and I think the patterns and process mastermind really broke that down well. And the participation from the members really highlighted, you know, what doesn't matter what stage you are in your trading, if you're able to understand these factors, then it will definitely enhance your trading abilities and definitely help with your results and decision making for taking more trades. Definitely more confident. You know, says, okay, fine, yeah, we'll do more of them, Patrick. I think we do the patterns and process. We haven't done one for a while. We do have one there already, which is that's phenomenal. And if you're new here, please don't miss the patterns and process that we have up there. It's really, really important to your growth. And we've just recently done a new one again. If you're new, and when you see that, you'll see the development of the members in the community, the growth, should I say. It's pretty outstanding. So let's take a look at this chart and let's see what we're looking at here. So first things first, what I can see here is just first things to identify is an easy uptrend. And it is actually a really nice uptrend. Price is putting in nice higher highs and higher lows. And as you can clearly see, we're staying above this brick wall. Okay, so we talk about this quite a bit, staying above this brick wall. Oops. And what I would say as part of where I expect price to go is back to some of these highs. So we're looking in around levels about 18,600, 18,700. And the reason why is because price likes to come back to key levels where price has recently had a reaction from or tapped into and then had a rally. So that would give me a good sign that price could come back here. Now, there's a couple of things we have to understand in this uptrend, that we're currently in a push phase. Because we're in a push phase, we can't buy the market, right? So in order to tackle this, what we're going to need to see price do is eventually pull back to create that higher low formation or create that retest of the structure. Before then, we see a continuation. Just standard basic market structure analysis. Okay, so what we're doing now, we're just masterminding and we're just figuring out how we can make a plan. Remember, this analysis lasts for 24 hours. So it will be Sunday through Monday, and then we'll reanalyze this again when we come back for our live session in the mornings on Tuesday, Wednesday, and Thursday. Okay. Last week on the morning sessions, if you're not joining them, please join them. We called out some really killer trades last week. Some really beautiful trades. Again, you know, not offering signals here, but we did call some really banging trades on the 1 minute, you know, higher time frames. And you just get to see my thought process before the live markets. And if you can join them, please join them because they are really good. So this is for Monday and throughout Monday, and we'll come back Tuesday to reevaluate this. So I've started to build a picture, and now I know that I'm more looking for buys than I am sells. It only makes sense to, as part of the numbers. If I see this structure and these patterns, if I take buys more than I take sells over 100 trades, I'm going to make money. So that's my plan. Where am I looking for price to come back to? Well, if price goes back down to some of these structural lows, that will be classed as a double bottom. Price has broken the previous high, which means we've now taken out a key level in the market. And we do have this brick wall / trend line that price has been trading above, meaning any buys above the structure means it would have been good for buys. So I now have an idea of what I'm looking for. And for that reason, I'll just clear this up and I'll start to create my plan for Monday. So the first thing I want to pop in here is my trend line up. I want to pop in here my target to where I believe price could come back to, just as a first target. And then all I want to see the price do is one or two things. I want to see price come back, respect this level as a potential double bottom, or I want to see price respect the retest level in the market. Now, being Sunday, I know we're probably going to either gap to the upside or to the downside. So preferably, this is how I would plan this. If price gaps down into this level, then I want to see price come back into this double bottom level before I take a buy. Okay. If price gaps up, then I'll be very happy to see price come back into this level here and then look for this reaction. Reason being, if price gaps up, then we have enough room to breathe, pull back, continue. And if price gaps down, then we just allow the market to pull back into this level where we have two confluences, which is price staying above this brick wall, this double bottom level, and then look for that continuation up. I'm only looking for confluence with my trades, okay? So my son's outside the door saying, Daddy, open the door. So just bear with me a second. Mummy will come and deal with him. Any easy way to use the MT5 like trading view, replay function with downloading extra software? Okay, so you guys can help answer that. I'm not sure. I don't use MT5. What times are the live sessions on Tuesday, Wednesday, and Thursday? Aaron, all the sessions for this month are in the resources channel, but it will be 7 a.m. UK time. So just before London Open, so we can dissect the market. And then for the 1 minute traders, we can just build structure on the 1 minute charts. Last week, we killed the 1 minute chart from the live sessions. Sometimes my voice is lagging. Is it really bad? Is it really bad, guys? Seems good. Okay, fine. So everyone happy with the plans on Euro USD? Everyone happy? What if it doesn't go as your plan? Oh, you, come on. I don't know how long you've been here, but it sounds like you're new, so welcome. But if it doesn't go according to my plan, then guess what? I don't take a trade at all. So this analysis will stand for Monday's analysis. And if this doesn't play out, then guess what? I won't take a trade. And with that question, you can go and have a look at my latest YouTube video and you will see me planning trades and them not like setting up the way I want them to set up, or the patterns developing for me to take those trades. And you will just see me not take them. And I think if you watch that, you'll get a good idea of how you can attack the market and deal with your planning, and then accepting if your trades don't go your direction, not taking them. Okay. Must be their connection, not yours, Rocks. Okay, fine. So everybody happy about these levels? If it touches the lower level, potentially a break of the brick wall, that concern, you know. So if it comes back to this lower level, I'm not going to be concerned of the brick wall. Remember, I'm only looking for the confluence. So really and truly, the level that I'm looking at is this major level here. Even better still, I'll be looking here. So if I'm looking here, this is how it would look like. Yeah. So if price comes back to in and around these levels and then slightly breaks it and then comes here, I wouldn't be concerned at all. You know, we don't want to get too caught up with price respecting levels too much and price respecting the brick walls. We just want to see how price reacts in and around those levels. Okay. Could you please do more videos like back testing? Yeah, I will in the future for sure, Umar. When trading lower timeframes, are you looking at monitoring many pairs or do you focus on one? Julian, one. You only need to focus on one. When trading lower timeframes, you only need to focus on one. Again, look at the YouTube video and you will see I traded the 5 minute time frame only. And it's very comfortable. You get to know the pair, understand the behavior, you get to understand how it moves, etc., etc. And it's just really nice. Once you get more confident, then add another pair. You know, once you get more confident with that pair, add another pair. Before you know it, you would realize you only ever need 1 to 3 pairs to trade in your life as a Forex trader. I have all these pairs here because obviously I have lots of members in the community who want me to review this, that, and whatever else. So that's why they're there. We pick 10 pairs so that we can drive a good variety, so we can cover all the correlating and non-correlating pairs, and to also make sure that, you know, those that are trading yen or the dollar or the pound or the euro, we're covering those areas as well, and those angles. But personally, I only trade the pound at the moment, pound USD, and that works absolutely fine for me as a full-time trader. So 1 to 3 pairs is perfect. Sweet. Watch that. Awesome. Provide good clarity. Okay, fine. So that's Euro USD. All right, let's move on to the next pair. So look, this is what you need to take away from this as well, that with the way price has developed in terms of being in an uptrend, breaking structural highs, pushing to the upside, we see strength in the euro right now, and we also see weakness in the dollar. So it's always good when doing your analysis to take that point away so that you can also identify what happened on the other time frames. Now, look at USD Jpy. What can we see on this market structure? Well, let's start to build a plan. First things first, we can see that the overall bias of this market has been pushing to the upside, okay? Now, there was a significant level in this market where price was failing to break above for a long period of time. And we can see around this level here, 105.68, price was holding and holding and holding. Eventually, we had a really strong break above this structure And when we break above structure, it is a good sign that price potentially is going to continue in that direction because of the bullish pressure. Now, if we take into account the actual overview of the market, which is up, and then price breaking the structure, now we have two confluence for bullish evidence. Now, we gather that information. It doesn't mean that's what we're going to be working with, but we gather that information. Okay. So what we want to see after we gather that information is supporting evidence to see this market continue pushing to the upside. Look what happens after we break this high. We never make a new high ever again. And we're talking a very long period of time. Now, you wouldn't expect that to happen from market structure or the behavior of the market if the market has just broken above the highs. What we expect the market to do is continue pushing up, or at least have a little bit more volume in these candles and make a new high. We've never done that. That's a strong sign that we potentially are entering a reversal phase. It's also a very strong sign we should not be looking for buys immediately until we are fully sure that this structure is going to continue up. Now, we can work with two key levels here, and that being this major structural high. So the reason why we want this is because if price is going to continue to push up and we're going to look for buys, we need to make sure that we have enough range to buy if we're going to buy it. Secondly, if we're going to be waiting for more evidence of this market structure to continue bullish, then we want to see price break in this structure. Simple. Reason being, again, it hasn't broken above this for a very long period of time after the last break, and we want supporting evidence to say this market structure is pushing up. Okay, we don't want to be in a situation where we take buyers and we start entering areas of consolidations like this with no true directional bias. The next thing I would say is price is really pushing strong to the downside, and we need to see price do one or two things if we're going to be looking for buys. Now, look, I kind of riffraff there with what I'm saying because the chart is telling me that we are not buy bias. I don't know how to explain this. I'm just telling you, the market right now is telling me we are not buy bias. Period, just from behavior. So I'm trying to find a level to look for buyers for you to help support what I'm saying, but it's not going to happen because it is just, to me, it's too sell bias. Okay. So I'm going to come off the buy theme and I'm just going to tell you what I'm looking for as a very simple plan if it is going to continue buys. If we buy, I'm looking for this price to break above structure, retest continue. That's it. I don't see any retest level in this market that will support me taking buys. I don't know why this level will be strong and why this level wouldn't be strong and why this level wouldn't be strong and why this level wouldn't be strong. You get the point? This is an area where price had no directional bias. So how would I know that we got buyers sitting here? How would I know buyers are sitting here? How would I know buyers are sitting here? How would I know buyers are sitting here? It's effectively a breakout, break back into a consolidation, which means we do nothing, right? So that's why I'm not sitting or looking for no buys. I'm feeling the sells. Now, to add one last confluence to my plan for Monday only, is the fact that we see Euro USD pushing to the upside, meaning Euro strong, dollar weak. Now, if price is pushing down, it means dollar weak, yen strong. That means on Euro USD, I have dollar weak, and on USD Jpy, I have dollar weak. It would only make sense that I suspect this market to continue down. So just for Monday, this is how I make my plans so that I'm not looking at the structure tomorrow and saying, oh, I'm going to buy, I'm going to sell, I'm going to buy, I'm going to sell, I'm going to buy, I'm going to sell. I'm just going to wait for what I'm waiting for. And that is a breakout of the structure retest for buys. If not, this is what I want to see. Price come back for a double top of this structure and look for this continuation to then create what I suspect to be a potential break of a brick wall, double top pattern, continuation down. This is just visualization, and this is me just identifying what I want to see for sells based on past history, backed by data and patterns that support that. Okay, so that's why I prefer this plan for Monday, unless the market tells me otherwise. Okay, so Rox, what time frame would you say you trade? I trade all of them, Aaron, man. I trade all of them, bro. It just depends on what I'm doing. To me, it's all the same thing. Honest to God, it's all the same thing. If I'm busy and I don't have time to monitor the 1 minute, then I'll just take a trade on the hourly and let it sit there all day long and come back in the evening. If I got more time, I'll bang out the 1 minute time frame. If I find a nice pattern on the 5 minute, I'll do that. But what you have to do, Aaron, if you want to trade or find the time frame that works for you, you need to backtest 100 trades on the 1 minute and document them. Backtest 100 trades on the 5 minute and document them. Backtest 100 trades on the 15 minute and document them. And that will give you the answer you need, which is which time frame should I focus on? Not what I do, because I might say the 1 minute's for me, but it's not for you. But you'll go for the 1 minute because it's working for me, but it might not work for you. Do you understand? So you just have to put in that little bit extra work to then figure out what you prefer. And then once you enjoy trading that time frame, then half the job's done. Okay. So this is what I'm working with. Does everybody understand why I'm not looking for buys? Do you understand the confluences that I've lined up here? And do you understand the pattern and the process that I've taken in order to find out what my plan is for the next 24 hours on this pair? Charlie says there's a minor level there that was created also that was rejected for sales. Yeah, I'm not going to be looking at any minor levels on Monday. No way. I'm just going to look at major levels for Monday. Reason being, Charlie, because the market will gap. If the market gaps, then no, if I know the market's going to gap, then it's just the minor levels are never going to hold on a Monday. So I'm always only looking at major levels on Sunday for Monday, okay? Equally, we couldn't be sell bias yet. No, we're not sell bias, Rob. Well pointed out. As I said, we would need to see the structure and the patterns form, which is what you see here, okay? If price doesn't make a double top, where is a key level for sales? So good question, Duran. We don't know, or if it's Darren, sorry, buddy. We don't know where the lower high is just yet. So just going back to what Charlie says, we could find a potential retest level here in the market, which we could break down on the hourly time frame as being a break, retest, or lower high formation. But because we're going into Monday, we don't know how the market's going to gap when it opens today, meaning any minor levels will not hold as part of our analysis going into Monday. So if we just wait patiently for the key levels, we will see either a double top pattern or we would wait for price to create Monday. I'm talking first 4-hour close, like just after London Open, to then see if we get a lower high formation and then go from there. 2 seconds. Okay. So yeah, that's the plan. Does everybody understand this? Now, I could be wrong, guys. I could be 1000% wrong. So don't take my word for it. You just monitor how the market moves as well. And if you feel sells, take sells. If you feel buys, you take buys. I just know that I can do 10 analysis and I only need to be right on 3 of them to make money. So I'm just working with patterns, making my plans so that I'm comfortable for Monday. So when I wake up on Monday, guess what? I don't have to think about anything other than see what the market is doing according to my plan. If it works according to my plan, I'll just take the trades as part of the numbers and that's it. Half the job's done. I don't have to think about it. I don't have to put too much emotional thought into it or psychological thought into it. It's just simple planning. And then I can focus my attention on more important things, which is me documenting, waiting patiently, et cetera, all those kind of things. Okay, hope I'm making sense. So please note if you're wrong, it's strong evidence showing that you're saying. Okay, cool. The next pair that we'll take a look at is pound USD. Okay, so again, look how simple this now is becoming for us to analyze based on Euro USD, USD Jpy, and pound USD. What can we see with this? We can see that this structure is up, meaning pound strong and what's weak? Dollar. Now, you see how it brings supporting evidence from all the other time frames to identify the potential weakness in the dollar. Now, you understand all 3 of these pairs have the dollar as part of the actual pairs that we're looking at, meaning that if the dollar strengthens, every analysis we do or have done will become void. But what that means is we're not going to take a trade then, which means we can't lose money. We just reanalyze the markets and then come back the next day or in the afternoon or whatever else. Okay. But there's a lot to support dollar weakness. Trump got a tweet over this weekend that would just make the dollar strong in a second. So I don't even think that's fair, but it is what it is. What I'm trying to say is I'm only looking for buys on pound USD for Monday. The next 24 hours, Monday, I'm only looking for buys. Now, price is in a push phase, meaning I can't buy the market. Price is just taking out a high, meaning good supporting evidence. We're trading above the brick wall, which is really good evidence. And what I want to see the market do is pull back to create a higher low and a continuation. The only problem I have here with this analysis from a high time frame perspective and in terms of looking for a key level is that there are too many key levels. There's one here, there's one here, there's one here, there's one here. I don't know which one to choose. I don't like the retest because the retest personally to me is too close to where price is now, and the gap up or the gap down will just easily violate it. So my plan is tomorrow to see how the market pulls back. Once the market has pulled back, if it closes, if I get a nice close with a wick rejection and a strong wick rejection, what I can then do is say at that point in time, well, look here, there's a wick forming here, and let me see if I can find confluence to the left. If it makes sense as to why price has stalled where it's stalled and left a wick rejection, then I can say, well, look, there's a high chance based on the trend, the break, the pullback, and now the wick rejection that this is a potential retest level in the market. Okay. Then I'll work with my brick wall, identifying how price is trading above this level. And if I say to myself, well, good, this looks good, what I'll start doing is scaling down to my hourly. I'd wait for that shift in momentum to confirm that bullish sentiment and evidence of price holding a level. And then I'll start scaling down to 15-minute, 5-minute, 1-minute time frames to support the momentum with a trend. Once I get the trend, then I'll start zeroing in on my patterns, and you know what they are. Okay, that will be my plan with pound USD moving into Monday. Now, subsequently, if price pushes down by the time I'm looking to trade and comes to this level and leaves a wick rejection, what I would do is I'll find that wick and then I'll put it to the left. And if it makes sense as to why price has reacted from this level, then I would say to myself, well, I'll continue that plan again. With all the added confluence, we have a wick, a level where price has created a reaction before. So now we have a retest. We have a push, break above structure, pullback, higher low formation. We have a brick wall support in an uptrend. Then I'm looking for the hourly push for the momentum shift. Lower time to trade structure to form, creating an uptrend, and then the patterns. And you know how that would work. Now, the question is now, where do we end seeing this pullback? Well, this is how I would end seeing this pullback. We have a leg here, which created a high and a higher high. I personally would only be looking for price to pull back to 2/3 as a final resort to look for a retest. So personally, as long as price stays above in and around this level, I will still look for buys. But if price starts to push back down into these levels, then what I'm going to be doing is identifying a structural high, a low, and a low, and I'll just start to see this market moving sideways. You have to give up at some point. You can't just keep cherry picking all the way. The reason why I picked 2/3 because it's a nice pullback on any push phase, and you will find that price likes to respect those levels in the market and then continue whatever direction it's going. So that is my plan. Okay. Bit difficult, this one, but it just is what it is. That's how I would plan this out. So that's pound USD. Do you have any questions on this? So yes, please note, even if you're wrong, it's strong evidence showing that you're saying you're making your plan. Let's say Sunday market open after the first row closed, the candles in your plan. Would you say it's too early? There is no way I would be trading on Sunday. None whatsoever. The way I like to trade is how I'd like to think I would trade if I was working for a bank or an institution. I'm a trader. The market's open Sunday. I plan and I prepare. And then I get up for work on Monday and I go to work, go to my office and I sit down. I wait for the markets to open just like they would. And then I trade. And that just instills really good discipline and habits into your trading. as opposed to sitting around all Sunday thinking, if the market creates this pattern on a Sunday, then I'm going to trade it because it might be a great opportunity for me to get into the market and win my first trade of the week. I don't want that mindset, Charlie. The mindset I want to have is plan, relax, enjoy my weekend how everyone else enjoys their weekend, and wake up on Monday ready to do what I do best. And that's trade, just like I would if I was in an institutional bank. And that starts at 8 o'clock. Well, not really 8, but up at 5, do all my planning, my whatever else I need to do, and then start looking to trade. Never take a trade on Sunday. Used to in the past, don't anymore. Push phase, wait for the retest of the key levels, a break, a retest, double bottom. Yeah, I don't think we're going to get a double bottom out of this one, Menno, to be honest with you. A retest of the previous structure is only good if price leaves for a little bit longer and comes back. So that is a great plan and well identified there. So yes, for sure. If price does not come back into structure, that was one we didn't mention, then it would be a retest of its previous broken level and then a continuation. Again, I don't see why this is going to be bearish and not bullish. So this is what I'll be looking for, okay? It's clear now, retest of 1,300 level. 1,300 level. Yeah, good call, Dylan. Good call. Good call, bro. At this stage, is a buy stop momentum entry above current wick worth a shot? No, Rob, I don't know what you mean by that, buddy. I just feel like you're saying, would we just look for a buy if price was to break above this level? I don't trade based on is it worth a shot. I trade based on price creating those patterns and those structures so that I just have a slight advantage. And yeah, I mean, you could buy here. It makes, look, to be honest with you, understand this, yeah? The market is trending up. This is your brick wall. Price is above it. In theory, if the dollar's going to continue weak, pound's going to be strong. You can buy here if you want. As long as you have your stop loss below the brick wall, it's a good buy. It's a good buy. But now look at your range of your risk to reward ratio and then look what you're asking from the market in order to hit your targets. You're asking the market to move this amount, 437 pips, just to be able to take advantage of a good risk to reward ratio management. You can't enter this on the lower time frames. How can you enter this on the lower time frames? If you're looking to buy now, how do you know on the lower time frames that we're not going to pull back down to some of these levels? And if you're buying this on the lower time frame, Rob, more often than not, your stop loss is going to be here. Your stop loss is going to be here. Let's say your stop loss is below the structure. Now we're in a push phase, so there's a high chance price is going to pull back. That would stop you out. That would stop you out. That would stop you out. And then the market will go up. And then you'll just fall into the category of the traders that say, the market stopped me out, and then it went in my direction. We have to allow the high time frame structure to form the pullback first, because after a pullback, we know that we're potentially going to continue in a push phase. So I would only buy how I've illustrated on the high time frames, because this is not wrong. But in terms of lower time frames, there is no way you can buy right now, especially going into Sunday with the gaps to the upside or downside, then the low liquidity, and then just pure manipulation for London Open. You just, not manipulation, but orders being filled or put on Monday. You just have to wait for the market to build up. So no buy order now, okay? Let's just wait for these plans. Do you understand, Rob? You're talking about Timothy now and momentum. I don't remember it. You probably know more about what's there than I do. So that's how I'd break it down. Any questions on this? Welcome, buddy. Cool. Let's take a look at the next pair. So the next pair we'll take a look at is Aussie Dollar USD. And what we can see now is the first thing that I identify was a trend to the upside, high, higher, low, failed to break below, sell by structure, potential break, retest, and we never made a lower low. We have this bullish sentiment in the market, Aussie dollar before USD, meaning Aussie dollar's strong. What's weak again? USD. So based on behavior and structure, lower high forming, lower low not forming, price breaking above, we know we're already bullish. Also at the same time, major key level in the market, price violating that level after it was being well respected is also a good sign of bullish evidence. Let's add some more confluence to this. What do we see? We see Aussie dollar strong, USD weak. Now we see 4 pairs, more added confluence. What bias are we for Monday, guys? Just 24 hours. That's all I'm saying. What bias are we for Monday? Or will I be for Monday? I don't know if you lot are still so biased. That's up to you. But I'm biased, okay? I'm simply waiting for a retest because that just looks beautiful to me. Aesthetically, it looks beautiful. I can recognize and I can visualize this being a nice retest level in the market. Now, if price was to break back into this level, that's fine. I'll use probably this as my last resort. I'll start to draw in my new brick wall, which will line up something like this. So now we have nice confluence. And then that's it. Just trading with the structure, looking for the behavior, looking for the retest, adding those confluences. And this is how I'll be looking to trade it. Pretty simple Aussie Dollar USD. So we'll move on. Does anybody have any qualms with this one? Or are we good to go? Chat, help me out. Are you happy with this? Just one question, Menno. Let's go. Let's take the question, please. Let's get this question in, buddy. No. Yeah, if I trade 1 minute. Okay, Menno, while you're thinking about your question, let's move on. You'd be sell, right? If I was trading 1 minute, I'd be sell. No, let's not confuse everybody. Remember, I'm not using higher time frame analysis, but I know what you mean. And because you've asked me that question, you should know the answer to that. But let's just focus when we're doing the 1 minute time frame. Let's focus on what we know we should be focusing over there, and on the higher time frames. Let's just stick to this for Sunday, right? So pound JP, why I'm not feeding the structure. I mean, yeah, look, any buys above this level would have been good. Okay. So from this point, if let's just say on whatever day it was, we decided to draw in this brick wall. The reason why we've drawn it in is we've identified price failing to make new lower lows. And we also see that price potentially is coming out of this trend to the downside and creating this uptrend. Any buys above this level that we would have drawn in, and this is how you would have drawn in this level, you would have just said, look, you can see price trading above it. As long as price stays above it, I'm good. And I know this is a random bias, so this is not how we trade, but the point I'm trying to highlight here is how important it is to trade with the trend. Say you see something like this. Again, we all have the skills and the know-how how to trade better than this. But the point is, if you're trading with a trend, it doesn't matter where you're buying at this stage, as long as you identify or have your stop loss below a level in the market where the trend is being respected, then you are good for buys. And then what happened here? Eventually, we see the market pushing up. Okay, but once you understand this theory, I said I'm going to teach you this theory because there's a lot more to it than just what I'm putting in here. So I will teach you this probably on our next session next month. But once you know that this stands as a good sign of trading with the trend, what you can then do is identify areas in the market where price is respecting, and then you can use confluence to look for patterns and then identify behavior to then take better trades with better stop losses and better risk to rewards. Okay, so we'll go over this on our next session next month. So now we have a trend to the upside. It's simple and it's easy to know. It only makes sense to look for buys. Again, this is not very clear, and I'm going to be honest with you, I'm not going to give you concrete analysis on this, but we are in a push phase, and clearly we need a pullback before we can buy. So for that reason, I'll see an area in the market where price is broken above. If price continues up, I'm only looking for the retest of this structure, nothing else. Continuation. If we don't and we come back down, then what I want to see is just as we did with pound USD, I believe it was pound USD. We're looking for price to create that first wick, then we're looking to the left for the confluence, and then we're looking for the supporting evidence of the hourly momentum or whatever time frames you're using, then lower time frame structure trends, and then patterns, which you will know. So just a very simple analysis on GJ, reason being structure is not as clear as I'd like it to be, in my personal opinion. So this is how I would approach it. Okay. No one can unmute themselves because I'm just focusing on talking about what's happening on structures at the moment, Menno. Does everybody get and understand why or how I've planned GJ for tomorrow. 24 hours. Let's make this clear again. Everybody understand. Jonathan says very good. Okay. All right. Let's move on to the next pair. Next pair we'll take a look at is Euro Pound. This is how we do it, everybody. Euro Pound, structural high, structural low, bish, bosh, bash, Bob's your uncle on this one. See you later, George. We're just waiting for price to break to the upside or downside and done. Okay. Now let's take a look at Euro Yen. Beautiful structure of this market pushing to the upside. As you can clearly see, we see price creating higher highs and higher lows. What are we identifying here now? Looking at Euro USD and Euro Yen, looking at Pound JPY, we see that Yen is not doing much at the moment. Euro is strong, Pound is strong, and clearly we can see that the bias of this market supports that as well as being more bullish than it is bearish. Now, at the moment, we can see with the structure of the market, we had a structural high here where price is failing to break above, meaning that this was a very significant level. After the break of this structure, you can see here we have strong bullish sentiment, but we did not continue that bullish sentiment. There's a depletion in bullish pressure right now, which is clearly understandable. It's allowed to do what the heck it wants. But look, we had strong momentum, depletion, pullback, strong momentum, depletion, push, depletion. In this stage, we had 1, 2, 3, 4, 5. You get the point. Second one, we had 1, 2. You get the point. Last one, we have 1. What is happening with Euro Yen? Well, look, I don't care what happens with it. All I want to see is this. I understand that we could be depleting, or this bullish trend could be depleting, but there's no evidence of it yet. I want to see price do one or two things. Continue the bullish run to the upside with market open, and then eventually come back to this retest level. We'll have a strong key level where price broke, then turned into a retest level, but wait for the confirmation of that retest for that double bottom continuation. If price breaks back in, I would consider this more of a range as opposed to looking for a retest level in the market. Reason being, this high I would support with this low, and this is how I would see the market. It's not clear here, and to be honest with you, this level is only going to be significant. This level here is only going to be significant from a structural perspective if price holds, continues up, and then comes back to it. If we break back in, then we cannot look at this as a breakout level in the market, because the breakout is really, it's pants. Okay, like I said, we had 1, 2, 3, 4, 5 bullish runs here. We had 1, 2, 3, 4 bullish runs here, and now we have 1 bullish run here. It's just, there's a lot to say that this trend is depleting, but we can't say for sure, but we can say the signs of. So plan A, simple, no more talking, no more waffling. Plan A is this: see the market continue pushing up, come back for a retest, continue. If it doesn't do that, then I don't care. I'm just waiting for more support and evidence to then look for another trade. Does everybody understand this? Is everybody happy with this analysis? Cool. Let's take a look at another pair here, USD Cad. So this I left on the screen just as an illustration for you all to see what we want to see happen as part of our planning. So all last week, we had identified very early on what was happening. Price was failing to break above structure. We also identified pretty early on that price had broken the brick wall. We also identified moving on through the week that price created a level, and if price comes back to that level to respect that level, there's a high chance that this will become a double top formation to look for continuation buys. Towards the middle of the week, we said once price was down here, there's a high chance we're going to come back to the lows, and we did. Now, moving towards the latter part of the week, we said in order to look for continuation sells, we want to see this happen. Break, close below, and then you can start looking for your trade scaling down. Again, you will know how to do that, and we have the continuation. The markets do not print beautiful, clean structure like this every single day. But could you imagine if you were patient enough to wait for the best setups that are clear, that highlight and fall in line with your planning, that fall in line with the structure, that fall in line with the behavior, and then taking these trades? Let's say you took this as a double top and you target some of these lows. You now have, just based off that simple analysis, a 1-to-4 risk to reward ratio trade, or almost 1-to-5. Let's say you waited for price to break the structure as we planned last week, and you look for a lower high formation trade here, which you all should know how to identify, which is this candle is an indecision, which is a pause candle, 50% retracement strategy as part of the pullback of this bullish candle. And then you targeted some of these lows down here, 1-to-5. Or let's say you waited patiently for this and then you saw price pushing down and you was looking for retest double top trades, which are down here, something like this using lower time frames. And then you targeted some of these lows here. You getting the point? Now, all the trades you take because you want to force a trade or you just want to be in the market is only eventually going to lead back to being break even or losing money in the long run. Whereas if you wait patiently for the best setups, even though you don't take trades and make money, when you do take trades, the chances are that it's less likely to lose and more likely to win, meaning that eventually you're going to just make more money than you would if you try to force making money every single day. Does it make sense? Makes sense to me because I've been through it and I still go through it. For some reason, I do feel I have to trade every day. This week, I forced myself not to trade on Friday because you know what? I had a really good week. I didn't need to trade Friday, but I had to fight that urge really, really badly. It was, whew, oh my gosh, it was tough, really tough. I had a chat with one of the mentors in the community, and he was trading, had done pretty well this week, and reached one of his targets for this week with what he wanted to reach. And he had to fight the urge as well. I'm not sure if he traded or didn't trade, but the point is, we all have those urges. And the point I'm trying to make now is if you can wait patiently for the setups to develop, and guess what? When they develop, you can take them and just have that high chance of winning them as opposed to just constantly battling the market, giving, taking back, break even, dealing with all the emotions, wait for the best setups and capitalize. And I say this to myself every single Sunday. If I give you or give you access to every single Sunday recording, or if you go back on every Sunday recording, I may not be 100% right. And I may not be 80% or 70% or 60% right. But what I do know is that the right that I am right and the right that I am right is enough, even just on the 4H time frame, which I just can't personally trade because it just takes too long. If I took every single trade that I've analyzed over the last 2 years, put on Instagram, put on YouTube and provided to you guys, that would have just been enough to make me a very, 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 very rich person. I'm telling you now. Think about it. Floyd Mayweather, boxer, has never lost. Do you ever have the thought that if you just put money on him every single time or trusted the process that he would win every fight? Have you ever thought about, I know this is gambling, so I apologize if you're offended by this, but imagine if you just put £100 or £1,000 on him every single fight, you would have never lost money. No, it's not the case with trading, but that's why we use a risk reward ratio that, works in our favor. But with every single analysis that I've done on the 4H time frame, even if 50% of them were right, as long as you're using the 1-to-4 ratio, you would have made money. So, but then there's me. So the point I'm trying to make is, but then there's me doing my analysis on the 4H, not trading the 4H because I use it as a directional bias of structure, but then down on the 1 minute time frame, hourly time frame, 30-minute time frame, 15-minute time frame, 5-minute time frame, and I'm there losing, winning. When if I just taken all the 4Hs that I've mentioned in the last 4 years, I just probably had no stress. Do you understand? What am I trying to say? Well, I choose to trade the lower time frames. I prefer it, but the point is, just wait for those clean setups. Okay, even gambling is a numbers game. No, definitely. Gambling is a numbers game. That's why there's professional gamblers, because they know it's a numbers game. Guys, did that make sense there? You happy with what I just said? Do you understand it? Did you take anything away from it? Sometimes I just ramble on. Sometimes you need to just tell me to shut up. But let me know in the chat. You getting the point what I just mentioned there? Sweet. Thank you very much. So that's beautiful analysis that we had. We planned this all last week. The week before, we called out every single level, we called out every single break, and it just was beautiful. Okay, it just was beautiful. Now, you want the honest truth. USD is weak as anything. Define the difference between gambling and trading. The difference between gambling and trading, I don't know. To be honest with you, as a trader, I'm not a gambler. As a trader, I use calculated risk. That's it. That's the way I see it. With trading, you have an edge. Gambling, you have an edge if you know how to have the edge. To be honest with you, it's very political. Personally, something I'm not going to go in. But there's an edge in gambling, there's an edge in trading. But personally, as a trader, and I always say this because of skeptics and questions like that trading is all based on calculated risk. And the edge that you have as a trader based on past history and continuous repeated recurrences in the market. And that's it. You're gambling when you're putting your money in the bank. You don't know if you're going to get that money back out. You think you are because you trust the bank, but you don't know what they're doing with your money while it's sitting in there. If that bank goes bankrupt, then you lose your money. You'll put your money in the bank account to trust that that bank will hold that money and look after it for you. Do you understand? A lot to do with your decision makings in life. I wouldn't call it gambling, but you have to take a risk whether it plays out or not. In theory, you could class that as gambling. Do you understand? I don't like the word gambling in terms of trading, but everything you do in terms of your house, if you buy a house, that in theory is gambling. You put in an investment to hope that that investment will stay at the price you bought it, but more often than not, increase over time so you can either sell it in the future for a profit. That's gambling. What if the economy crashes? You're going to lose money. Do you understand? Everything you do that involves money involves a risk. And yeah. Anyway, yeah, look at Ellison. He even just said it there. Any investment contains risk. Beautifully said. If you don't know your risk, you're gambling. That's a good point. That's a good point. iPhone 8, I've asked you to come in with your name, please. You know why? It's just nice to just get that personal relationship with you as opposed to be an iPhone 8. So please come in with your name next time. Even the life is a risk, absolutely. Crossing the road when the light is green is a risk, but people still do it. Do you understand? Cool. We've got to take risks in life no matter what, for sure, Lucas. Good point. So yeah, so USD CAD, I'm going to be honest with you. You can see that USD is weak. CAD is just all the way down there in no man's land. I don't know the pullback and I don't know where it's coming back to. If you want my honest opinion, when I see structure like this, I don't like it. I'll tell you why. Simply because now we know that on the way up, guess what? We're going to have a potential trend. If the market flies all the way back up, which I doubt it's going to do, then, you know, whatever. I only have one plan. I'm looking for a 2/3 pullback on this, and that's it. That is it until I see something else. A 2/3 pullback into this level or in and around this level, or just simple double top. That's it. That's my plan. That's my plan. The push phase is so strong. I don't know where the pullback's going to pull, but I don't know where it's going to pull back to, but I do trust the 2/3 pullback. And for that reason, that's all I'll wait for, or the double top can form, and then I'll be good for that as well. Okay. Everybody cool with USD CAD? Okay. Okay. Again, I left this analysis here for you to see because I think it's absolutely beautiful. Last week, we looked at the structure of the market. We again continue to identify this trend to the downside. We wasn't getting any clear evidence of what we need to work with only up until like the middle of the week, I do believe. We saw that price created a lower high. We were looking for a double top. We were looking for price to respect that trend line. And look, we get the evidence. If you took this trade, again, going back to what I said, if I took every single trade that I've called out on the 4H time frame, even though I know I wasn't 100% right, but even 50 or 30% right, and took those trades, I'd be in a different place right now alongside my lower time frame trading. But the point is, just wait for clean structure. Look at the clean structure. Look how it's developed. And boy, out of those 10 and 10 analysis, let's say last week or throughout the days, let's just say I just took Sunday's analysis last week. Let's say out of those 10, if 5 of them were losses, 1 was break even, and 4 of them was winners, I'm making money, baby. Do you understand? You're making money. So if you had to wait just for these 2 clean setups this week, or maybe 3 or 4 of the 10 setups that we called on Sunday, you'd be in a good place. Just think about whether you need to be trading every day, and think about the trades that you are taking. Are they as clean and crisp as they could be? And do the confidence line up as much as they should be? Okay, sort of questions like this you need to be asking yourself. Again, with this analysis, it was gorgeous. I love it. I love it. I love it. What's my plans on this? Again, super overextended, weak dollar, Swiss franc. You know the deal. Looking for the market to pull back to potentially, don't know. On this, again, we're in a very strong push phase. We have a retest level here, which is around 2/3 / 40%, whatever. We could be looking for price to pull back. Look, these are just on these 2 pairs alone, these are just very open pullbacks. Until I see more supporting evidence, this is just how I see it for now. And the reason why I don't care whether I have conclusive plan or not with these 2 pairs is because if it's not a plan to make, there's not a plan to make. I prefer not to trade it and lose money. Simple. I prefer to trade it and have a higher chance of price continuing the direction. If you sell this as a break and retest, look at the stop loss hunt after the double top. Stop loss hunt, yeah. And this is a good sign. And I do mention this as well, because this on the lower time frames, what pattern would this be on the lower time frames? So once you get that supporting evidence, remember, you're not just jumping into the markets, right? If you're taking this trade, just remember this, understand this. If you're taking this trade and this is what you see, Daddy, and you're looking to take this trade, are you taking this trade up here? Or are you looking for that momentum shift and then place your stop loss here? Then you target your 1-to-3 risk reward ratio. And this is why stop orders are really, really important. This is how you'd be looking to take the trade. Now, look at that. You avoided taking a trade prematurely, being hunted out of the trade, and then seeing the market go in your direction. So that's one reason why we use stop orders, because we trade with momentum and we don't just take trades prematurely just because price made a double top. Secondly, once we set that as a sell stop and we was never triggered in and we see the stop hunt, what pattern develops after this happens here? What pattern develops? On the lower time frames, who knows? Come on, chat. Stop sleeping on me. Break and retest back into structure. Break up and break back in iPhone 8. Break up, break back in. Exactly. So when you start scaling down to lower time frames, you get a breakout, break back in pattern. And what does that represent? So alongside a stop hunt, as Daddy called it, you'd also see that as what in the markets? An indecision. But once you get that evidence of price respecting that level and the momentum shifts, what can you start to do then? You can start scaling down to your lower time frames, and then you can start looking for your patterns. So your lower highs, your double tops, your wick rejections, and then taking your trades. And this is how you bring structure with behavior and then look for those patterns to take those trades. Okay. Harry says, I found trading the 4H time frame only to be more peaceful, but having to have a big stop loss doesn't seem to work out when forward testing with a small account as the risk becomes greater. Any advice on this? No, you have the answer to your question, Harry. It's true. Because you have a much larger stop loss, you can't really get your risk in line with your small account. So you're going to have to take your knowledge and scale down to one more time frame, bro. Or you're going to have to figure out if using stop orders or using the candles to enter your trades is worth your while. You might need to be taking limit orders. You have, look, bro, you have tools in the market. Those tools only you can use. And only you know how effective you are going to be using those tools. No matter what I should tell you or guide you or encourage you to do, if you don't know how to use those tools to your advantage, you're still not going to be able to use the advice you get given by me or anybody else. So you know the answer to your question. In theory, it's going to be difficult for you to trade the 4H time frame because of the account size, meaning you're not going to be able to use good risk reward ratio, risk management. So you have to decide, instead of risking 1%, will I accept risking 3% for this trade, knowing that, yes, I'm not following the 1% or 2% rule that I originally have, but I just allow a little bit more leeway so I can trade the time frame more comfortable and something that suits me and my lifestyle, right? Or you say to yourself, if I can't do that and I don't want to risk 3% or 4% because I can't deal with the fear of losing that money, then what you need to say to yourself is, how am I currently entering the market? If I'm entering with sell stops, then that means I'm looking for the momentum shift, which means my stop loss range is going to increase slightly. So you can't use sell stops. So you have to eliminate that. So now you're starting to whittle it down. Then you say to yourself, if I use engulfing candles because I like to see the momentum shift, but the range increases dramatically, then you have to admit it to yourself. You can't use engulfing candles. So you have to eliminate that. So you're whittling it down. Then you have to say to yourself, if I'm using instant executions, am I entering as close to the key level that I expect price to respect? And am I trusting the process enough that price will respect that level and continue in the direction? Or am I hesitating, waiting for more evidence, which is increasing my stop loss range? If that's the case, you need to eliminate that. And then ultimately, only you know this, I would just whittle it down this way and say, well, maybe I need to use limit orders. If I use a limit order, I can cut my stop loss range by 25% or even 50%, meaning that what could have been a 4% trade based on that stop loss range is now a 2% risk trade. And that's how you do it, bro. Once you've done that, then Harry, you need to then go and back test, forward test, and figure out if that's something you can use in the live markets. And this is what will make your business sustainable as a trader. Because the answers are just not going to come out of thin air. And not everyone's going to just be able to give you the answer just like that. You have to you have to put in the effort and the time. Not saying you're not, but I'm just saying you have to put in the effort and time to seek those answers based on what is actually happening in terms of your results. Once you know them, you can then have more confidence and faith in your abilities, and then you'll be able to get into the live markets without any fear and just do what you know you should be doing. And that's how I'd approach it. Does this make sense? Oh, Harry says, okay, cool, thank you. All right, cool. So that's USD Swiss franc. That's the plan. Wait, no, hold on. The plan was not this. The plan. Oh, I hate it when my phone goes off. The plan is the retest. Yes. Coolio. And then the final pair is Cad Jpy. All right. I just keep putting this pair on a back burner. I think I'm done with analysis today. It's clearly up, but I don't know where it's going. I mean, it's in a push phase, waiting for the pullback, retest of what level, I don't know, guys. But I think I'm done for today. I think we've learned enough. I think we've gone over enough, and I think we have a good plan. We can see euro is strong. We can see dollar is weak. We can see pound pairs are moving up. So at the moment, a lot of the majors are, really moving nicely in terms of the trends. We can see that the USD Swiss franc, USD Cad is really strong to the downside. We're just waiting for some nice pullbacks on those pairs. And yen is not showing any signs of strength. So we could still continue to look for, buys and sells against the yen itself. I personally would say, guys, enjoy tomorrow, see what the markets do, allow it to develop, see if it falls in line with the plans. And if it does, then let's go for our trades. If not, just let the market breathe, let it fill the gaps, and then consider trading on Tuesday. My best days trading are Tuesday, Wednesday, Thursday, and I like to max on Monday and Friday. So they've given me my best results. I don't know when your best results are, but definitely worth considering. Try to remove the impulse on a Monday and try to remove the greed factor on a Friday, and you'll start to see some more discipline in your trading. This session will be posted on YouTube. I hope everybody had a good session. I hope you enjoyed it. I hope you learned from this session. I look forward to catching you in the chats, guys and ladies. And just to let you know, I will be posting the mastermind at some point today, so I hope you enjoy that. If you haven't watched my YouTube video, please go and watch it. I really think it's important. I'm not promoting this for views, I'm promoting this for your benefit. It's very encouraging to see. If you've had a bad week or a little rough patch recently, go and have a look at my rough patch on that video, and it will really help you out. But other than that, everybody have a great Sunday, and I will catch you in the chats. Catch you in the chats. Bye bye for now.